give it a few seconds, like always. And let's get started, shall we? So what if you could identify the next generation of billion-dollar tech companies before they explode in value? And you could do it by tracking a pattern that's consistently created some of the most successful founders and investors in all of venture capital history. You're going to discover today how tech mafias, these are groups of alumni from transformative companies like PayPal, who went on to found Tesla, LinkedIn, and Palantir, are now emerging from today's leading AI companies with unprecedented advantages. Alumni Ventures has developed a strategic playbook for identifying and investing in these AI mafia founders who are leveraging their specialized technical expertise, mission drive culture, and very unique position in the AI ecosystem to build potentially world-changing companies. So this presentation doesn't just reveal an investment opportunity. It's about understanding a fundamental shift in how groundbreaking companies are being created, with better economics and teams built from the front lines of AI research. To learn how to participate in these opportunities, scan the QR code on your screen at any point during this webinar, or connect with our team at av.vc to dive deeper into our AI strategy. So our host and speaker today is Meera Oak, and let's hand that off to her. Meera?
All right, let's go ahead and get started. We've titled this presentation, The New PayPal Mafias, Investing in AI's Next Great Family Trees. And this really was the culmination of a lot of research, conversations with founders, and a lot of pattern matching that sort of have revealed what we feel are the most exciting investment opportunities that we've seen this decade. Just to call out, I think we all are a bit familiar with the PayPal Mafia story, that sort of dynamic that Elon Musk, Peter Thiel, Reid Hoffman, and so many others have gone on to build an extraordinary collection of world-changing companies. And that all stem from PayPal. But we believe that we're witnessing the formation of something potentially even more powerful. So I'm excited to dig in and explore why. But maybe before we get fully started, I might pause and remind everyone we're speaking today about Alumni Ventures and our views of the associated investing landscape. And that this presentation is for information purposes only and is not an offer to buy or sell securities, which are only made pursuant to the formal offering documents for the fund. And if you have any other questions, feel free to visit the URL at the bottom of that page. So what are we talking about today? Here's our roadmap. We'll start by unpacking the tech mafia phenomenon and, why these alumni networks consistently produce successful companies and create outsized returns. We'll look into, how AI companies are functioning as, an extraordinary founding boot camp and training that next generation of founders. We'll explore, what makes this AI wave fundamentally different. The structural advantages that previous tech generations simply didn't have. I'll walk through an OpenAI case study, highlight some companies that I believe are rising stars and becoming talent incubators themselves, and go into the unique advantages that these AI mafia founders have today. And finally, I'll share our investment approach and explain why we feel there's a unique window of opportunity right now. I might move a bit quickly, but we are recording, and we'll be sending that out. So feel free to go back and rewatch the parts that you may have missed, and feel free to book a call with us if you'd like to learn more. Now, a bit about me. My background, stems from, my time at Swarthmore and Dartmouth's Tuck School in terms of education. But professionally, I've worked across multiple sides of this innovation ecosystem. I held strategic, financial, and operational roles at Yale. I worked at early stage venture funds and incubators like Create Venture Studio, where I launched businesses and sourced investments across enterprise SaaS, infrastructure, and more. And I think having spent the bulk of my time at the earliest stages, I've seen how those early innings of company development many times, and how those founding teams really form, with the right experiences and the right connections. And I've seen how they navigate the challenges of building category defining companies. So that pattern recognition is really crucial for what we're discussing today. But maybe enough about me. I'd love to share a quick overview of Alumni Ventures as well. And we launched in 2014 with a pretty straightforward mission to democratize access to venture capital, and that were previously available to only institutions and large asset holders. So since then, we've raised over 1.4 billion in AUM from over 10,000 individual investors, and have invested in over 1,500 portfolio companies. So this level of activity has made us one of the most active venture firms globally, and the largest US venture firm focused on individual investors. We have a pretty robust team of about 120 team members, and they're primarily based in Manchester, but with many innovation hubs across the US, including Boston, New York, Chicago, and the SF Bay Area, which is where I'm based. And this geographic distribution is one of my favorite features, honestly, because it gives us visibility into emerging trends and founders across the country. Now the trophy case. I won't dwell here for too long, but I do want to highlight that our approach has earned recognition from really respected organizations in our field. CB Insights has us as a top 20 VC. PitchBook consistently ranks us among the most active VC funds, and Fast Company named us as one of the most innovative companies. And I'm particularly proud of this community that we've built. It's the largest, most engaged network in entrepreneurship. And this community has created such a powerful engine for identifying promising opportunities early, which is in part what we're talking about today. And one question I often get is, who else are we investing alongside? And we've established relationships with many top venture firms, Andreessen Horowitz, Khosla, Sequoia, YC, and NEA. And when it comes specifically to AI investments, which I know is sort of a topic of today, we've been particularly active with strategic co-investments. Our portfolio companies include Lambda, Together AI, and Unstructured. Could go on, but these are core infrastructure players that are enabling the broader AI ecosystem. And we've partnered with leading AI-focused investors to access these deals early. And that's often leveraging our network to add value beyond capital. And the feature that I think a lot of these firms really appreciate is that we're quite complementary in our nature. Our LP base and the value add capabilities that we and our network can offer is sort of how we find our way into these really competitive and otherwise inaccessible deals. So really excited about our position in the market and the value that we add to the portfolio. Awesome. So let's get into the heart of today's discussion. And just a caveat, when I use the term AI mafias, again, I'm building on this familiar venture capital concept with some important distinctions about why we think it's especially unique. So let's get into it. So how tech mafias create billion-dollar outcomes. The venture world has really long recognized the outsized impact of alumni networks. I mean, look at the name Alumni Ventures to sort of start. But really, what we've seen is that there are breakout companies that have stemmed from this PayPal mafia as a textbook example. Elon Musk, Peter Thiel, Reid Hoffman, and others who have really gone on to build category-defining companies like Tesla, SpaceX, LinkedIn, Palantir, and countless others. And, collectively, PayPal, just to take that as an example, their alumni have contributed over 575 startups and have raised over 200 billion in capital. And, we've seen this playbook unfold amongst Google alumni and so many others that we'll sort of get into. But this impact is why this term and these networks have so much notoriety in the field. And when we take a step back, there's a few common factors that serve as a through line for this phenomenon: hypergrowth, company culture, and trust. And we'll get into that a little bit more in the next slide. So a natural question that we often get is, what is their origin story? How do these mafias form, and what makes these networks so productive? And to start, these mafias really emerge from hyper-growth environments that function as what we call entrepreneurial boot camps. So employees in these organizations learn how to solve new problems, how to build scalable systems, and how to make consequential decisions with limited information. And I think the kicker here is that this can mean, this can drive hypergrowth. And depending on the company, that can mean millions of revenue, millions in users, or even more. And these are important experiences that larger and more traditional organizations rarely provide. I think a second, attribute is that each successful company also develops a pretty distinctive cultural DNA. And in speaking, in this process, I had the opportunity to speak with alumni from some of these companies. And PayPal actually has cultivated a bit of a contrarian thinking and scrappy resourcefulness attitude, while Stripe, really emphasized elegant engineering and, a really strong developer experience. So these traits really become embedded in their employees, and then those employees carry them to new ventures. And then finally, and perhaps most importantly, these shared experiences create really dense networks built on trust. And I see this in our portfolio companies almost every day. When you've weathered serious challenges together, you form bonds that become incredibly valuable. Your former teammate becomes your future co-founder. Your previous manager becomes your angel investor. Your colleague introduces you to your first enterprise client, and on and on and on. And these relationships dramatically accelerate company formation and early growth. But yeah, the real question is, what makes AI mafias different and more powerful? And I think that the next generation of high flyers carries familiar traits, but introduces impactful differences. So first, we're seeing an unprecedented technical expertise emerge from our founding teams. You have companies like OpenAI, Anthropic, and Mistral, which are building teams at the frontier of AI research. And these engineers aren't just sort of skilled in their craft. They grew up with novel architectures and training techniques that are nearly impossible to replicate. Second, there's a mission-driven culture that we're noticing. Unlike social media or marketplaces, leading AI labs are focusing on very deep questions of intelligence, safety, and societal impact. And we think that this perspective drives founders to balance that technical ambition from a strong engineering team with really thoughtful consideration of societal effects. So that's becoming an increasingly valuable trait, especially as regulatory focus on AI safety intensifies. And then finally, we're entering this, quote unquote, perfect time in the tech stack. And what I mean by that is, the foundation models are built. The infrastructure available to everyone is pretty solid. And so there's a shift happening towards the application layer. And it's sort of mirroring the explosion that we saw in web in 1995 or mobile in 2008. And so we feel that AI mafias are really poised to dominate this phase. And I actually recently spoke with a founder who spent a couple years at Anthropic working on reinforcement learning from human feedback. And she's now applying those techniques to manufacturing, which is really unlocking entirely new methods for quality control and process optimization. And this is pretty fundamental in terms of their breakthrough. And it's not just like incremental improvements. It's a pretty seismic shift for certain industries. And so what we're seeing is this unique blend of, again, unmatched technical depth, mission-driven focus, and the perfect timing, which positions this mafia as, pretty different from prior waves of innovation. And let me sort of take a double click on OpenAI for a moment, because I just find that their talent diaspora is like pretty compelling and sort of offers a window into how these networks operate. Probably many remember, back in 2022, late 2022, when ChatGPT launched, it created this cohort of individuals with rare experience deploying AI at massive scale. And think about the technical challenges that OpenAI's, employee base solved. They solve for context window optimization, retrieval augmented generation, hallucination mitigation, prompt engineering, inference optimization, so many technical capabilities that the list goes on and on. And this knowledge base is enormously valuable when applied to both vertical and horizontal problems. And jumping down to an example, we have Thinking Machine Labs, which was founded by former OpenAI CTO Meera. And after helping bring both GPT-4 and DALL-E from research to production, she's now applying those same technical frameworks to new domains. And so her insight from OpenAI into model training and deployment and optimization gives her team a massive and almost unfair head start on this front. And so to me, what stands out about this node is really how Sam Altman and OpenAI have cultivated an quote unquote in the family flywheel. When alumni start companies from OpenAI, he often, wires money immediately, then layers in the OpenAI startup fund investments, additional credits for APIs, and then access to the organization's Converge accelerator. So many of these features and sort of value add that through this investment of shared infrastructure, they achieve so much alignment. These startups build on OpenAI's model, providing valuable feedback and use cases that improve the core technology. And this technical knowledge sharing goes both ways. We're seeing that startups get access to these optimization techniques and implementation patterns from OpenAI, while OpenAI gets industry-specific insights from specialized applications. So every alumni that comes from OpenAI really expands the OpenAI footprint. They have more data flows, broader distribution channels, and greater influence on policy and standards. So it's this technical ecosystem that strengthens itself with each new node. Great. And while model builders are getting the attention, rightfully so, we're seeing the infrastructure and application layers of the AI stack as equally fertile ground for innovation. And so let me highlight some of these, what I call rising stars, because we think that they're becoming even more important talent incubators. So if we start with infrastructure, we have companies like Lambda, which is actually an AV portfolio company, which is building a hardware and software stack for AI training. And they are really, recruiting a team with deep expertise in GPU optimization and machine learning operations. That's pretty invaluable to that next generation of AI infrastructure. In a similar vein, we have companies like Unstructured, which is also in our portfolio and is solving this critical data preparation problem, which is really turning unstructured content like PDFs and HTML and emails into large language model ready data. And their team's expertise in document processing and knowledge extraction really represents a technical moat that will spawn, numerous vertical specific applications. Just think about, any sort of legacy organization that lives on PDFs and, paper and pen transactions. This is a huge unlock if Unstructured's alumni sort of step away and launch companies in those specific industries. On the application side, I won't. There's so many to comment on. I won't go into all of them, but I will call out, Cursor, which is building AI-powered coding tools that reached 100 million in ARR in under 3 years. And so their team really understands the intersection of development workflows, AI assistance, and a user interface that is better for almost everyone. And then on the other hand, we have Abridge, which uses speech and generative AI for medical documentation. And so they're combining specialized speech recognition with medical knowledge integration to solve a critical healthcare problem. So I think what makes these companies particularly interesting as talent incubators is their domain specialization. And I think unlike previous tech generations that built general purpose platforms, these teams are developing deep expertise in specific technical niches or industries. And so when they're alumni, as I mentioned, when they eventually found startups, they'll bring both AI engineering knowledge and valuable domain expertise, which is really a powerful combination for building targeted solutions. Awesome. So, let's dive into sort of what makes this a bit unfair in terms of the advantage for AI-Mafia founders. And the reality here is that this next generation of founders has structural advantages that previous generations simply couldn't access. And I'll highlight a few here that are sort of changing the equation. First, foundation models. These are building blocks that have been really transformative for startup economics. If you think about Google or Facebook and how they scaled, they had to build their core technologies from scratch. They trained their own recommendation systems. They created their own infrastructure. And today, founders can leverage powerful foundation models as starting points, which reduces both their capital requirements and their time to market. And I want to share an anecdote because I think it's so staggering, which is just, when you look at GPT-4 and its capabilities today, you learn that training GPT-4 cost roughly $100 million and took months on specialized hardware. And today, a startup can fine-tune that same model for their domain in days and with thousands of dollars. So this isn't just sort of iterative improvement, it's really a fundamental shift in what's possible for smaller teams. Second, I'll touch on sort of the modern AI developer tooling that has really just offered unprecedented velocity to companies. We have companies like, frameworks like LangChain and Llama Index, which have made complex AI application development accessible. We have vector databases like Pinecone, which handle data retrieval pretty efficiently. And we have evaluation frameworks that help identify and systematically address model limitations. So the tooling ecosystem has really accelerated development cycles, and it allows teams to build in weeks that would have previously taken months or years. And third, I'll touch on this 3-person unicorn economics, which I think is personally one of the most incredible sort of features that we've seen. And it's something that NFX actually coined recently, which is that companies, like Cursor that I mentioned earlier, have reached 100 million in ARR with just 30 to 50 employees, compared to hundreds or thousands at previous unicorns. And so this capital efficiency creates a virtuous cycle. We're seeing lower burn rates, which means longer runways with less capital. We're seeing reduced dilution, which preserves founder ownership. We're seeing faster iteration, which enables rapid product improvement. And these small leadership teams are making decisions more efficiently and faster rates. So I really appreciate sort of this nuance and what it's bringing to early stage founding teams. Fourth, I'll touch on the enterprise AI adoption and how it's kind of reached this tipping point. So after years of experimentation, large enterprises are deploying AI solutions that deliver measurable ROI. And so we're seeing that this dramatically reduces go-to-market friction and accelerates revenue growth, because today's AI companies are entering environments where buyers already understand the technology and they are ready to deploy budget when asked. And then finally, we have multidisciplinary founding teams with pretty unique perspectives. Previous tech mafias were predominantly engineering focused, but today's AI startups feature teams with a blend of technical AI expertise and domain knowledge. And so we're seeing that this combination enables them to build systems that aren't just technically impressive, but they're also really usable and useful and human values aligned. And so we think that can actually be longer lasting for the company. Wonderful. So this chart, I think, perfectly illustrates the technological economics revolution that I just described. So if you look at Cursor's path to 100 million ARR in just 2 years, compared to previous tech companies like DocuSign to the far right, which took nearly a decade to reach the same milestone. So this isn't just faster growth; it's really fundamental in their scaling model and how it's been enabled by AI. Again, Cursor achieved this with 30 to 50 employees. DocuSign needed hundreds to reach that same revenue level. And the implications for technological efficiency are pretty profound. We're seeing that AI-powered products can reach more users with less human intervention, and product improvements can be implemented and iterated faster. So the result is exponentially better economics. We're seeing higher revenue per employee, lower capital requirements, and faster time to value. So what does this mean for Alumni Ventures and our playbook? I think given these patterns, we've been quite disciplined in approaching this opportunity on Alumni Ventures seed team. And to start, we made a pretty concerted effort to identify and build relationships with the strongest technologists, researchers, operators at these leading AI organizations. We're monitoring everything from papers, conference presentations, career movements, just to see who might be thinking about making a significant move before it's known publicly. And when someone does spin out, we've developed a rapid decision framework when it does occur. And this includes, a technical assessment of the founding team's capabilities, a market opportunity analysis, competitive positioning, valuation, and reference checks, throughout our network. And so we're being quite methodical and that allows us to move decisively when these opportunities emerge, even in competitive rounds. And finally, we apply this evaluation criteria across all opportunities. Technical pedigree is always a strong signal, but we rigorously assess all aspects of the business, the market potential, the technical differentiation, and how well the team can execute. Because we've seen that the best technical talent is incredibly helpful, but it doesn't always translate to the best businesses. So we need to be holistic when we think about that evaluation. Awesome. So why act now? This question is so important. First, we're entering this critical enterprise AI adoption window between 2025 and 2030. And what I mean by that is, after years of exploratory pilots, large organizations are now deploying AI solutions that deliver that measurable ROI. And this really isn't aspirational. We're seeing concrete evidence across industries, from financial services firms to healthcare providers to manufacturing companies. People are ready to act. And from a technical perspective, the barriers to adoption are falling pretty rapidly. Again, models have reached a pretty high performance threshold. We're seeing that tooling that makes integration and scaling way more accessible and achievable. And there's this technical talent migration occurring as researchers and engineers leave pretty established AI labs to apply their knowledge to specific problems. And the diffusion of expertise accelerates the development of AI solutions across industries. And so it's creating so many investment opportunities that were not even possible even a year ago. So finally, AI native startups can achieve really high revenue figures with headcounts that are measured in the dozens rather than the hundreds. And so this capital efficiency means that founders can build bigger businesses faster and with less investment than ever before. And we just think that that creates a really compelling economic stage for seed stage investors. And the reality here is that the window to participate in this transformation won't be open indefinitely. So in our minds, now is the time to engage while these networks are still forming and the most promising opportunities are still emerging. Awesome. So if this philosophy, resonates with you, I'd really love to continue the conversation. Our Alumni Ventures Seed Fund is specifically designed to capitalize on these emerging networks with a disciplined investment approach. And we have a fantastic team. I know I'm a little biased, but I think we're incredible. And we're geographically positioned to build relationships with the next generation of founders. I'm based in the SF Bay area, and my colleagues are based in New York and Boston. So we are sort of positioned for where this innovation is actually unfolding. So if you're interested in scheduling a call or would like to access our fund materials, feel free to utilize the QR codes here. Awesome. And before we wrap, we did get a few questions submitted ahead of time, as well as some that came through live. So let me just pull those up and we can get to them. All right, so one question came through that was asking, how are these AI mafia startups navigating the increasingly complex regulatory landscape, especially regarding AI safety, data privacy, and competition concerns that weren't as prevalent for previous tech mafias? Yeah, this is such a great question and something we discuss pretty regularly. So AI mafia founders are taking a pretty different approach from previous tech waves because they're prioritizing safety and responsible deployment from the start. By being proactive, features like audit trails, governance frameworks are sort of being embedded at the get-go, and it really offers a competitive edge. And in heavily regulated industries like healthcare and finance, this commitment to trust and transparency has only accelerated adoption. So with this mindset, I think we're seeing that advanced techniques like federated learning and synthetic data generation, companies are minimizing risk and positioning themselves for long-term success as regulations evolve. It's a great question, though. And then we have another one that is, are these AI mafias primarily a Silicon Valley phenomenon, or are you seeing similar talent networks forming in other global tech hubs? And how does that affect investment strategy? Yeah, this is a great question as well. I'm based in Silicon Valley, and so I've certainly found that the San Francisco Bay Area has the highest concentration of these networks. But that said, AI mafias are popping up all over the world, and it's definitely shaping, how we think about investing. If you just look to Europe, London with its DeepMind alumni is becoming a hub for scientific AI. Paris is making waves in foundational model development, thanks to Mistral AI and their strong academic roots. We're seeing the same thing play out in Toronto with the Vector Institute, which is fueling innovation in healthcare AI. And, Israel still remains a leader in AI security and infrastructure. And actually just the other week, I spoke to a founder based in Stockholm who recently spun out of Lovable, which is this up and coming mafia in the web creation space that has grown tremendously over the past year. So our strategy is evolving to match this global shift. We're building relationships in these key hubs. We're understanding the local talent dynamics, and we're adjusting our evaluation frameworks to fit each region's strengths. I think that might be all the time that we have. And I really want to thank you all for joining us today. I hope I've conveyed sort of why we're so excited about AI Mafias and the transformative companies that they're creating. If you're interested in this topic, please keep an eye out for more content here. And thank you again for joining us.
Okay, thank you so much, Meera. The AI landscape is evolving fast, and the real edge lies not just on the tech, but in the people building it. Thanks again for joining us today, and if you're ready to back the next generation of breakout founders, we'd love to hear from you. Again, scan any of the QR codes you've seen or visit us online at av.vc to get started. And we will see you next time.